The market is doomed. Hi everyone, welcome back to Kyle's Financial News. My name is Kyle. Today is May 29th, 2024. The Dow is down 1%. The S&P 500 is down 0.75%. The Russell 2000 is down 1.5%. Expect to see some limit downs tomorrow. It's about to get nasty. I'm kidding. I'm absolutely kidding. I'm totally kidding. We're up here near all-time highs and markets are just taking another breather. We've seen this a million times before. It's nothing to panic about. Mainstream media is going to be posting about a down day left and right as much as they can. They're trying to just trigger a whole wave of selling. This is nothing abnormal to what they usually do to get clicks and views and shares and whatever else they can get. Earnings yesterday weren't anything wild. Salesforce, ticker CRM, came down quite a bit after a revenue miss and weaker guidance. Chewy, ticker CHWI, is up nearly 30% after posting really good data and announcing a $500 million buyback. It kind of makes you wonder, how or why are companies performing such large buybacks if the market is as bad as everybody is saying it is? NVIDIA ticked up another 0.8% for the day. Market cap-wise, NVIDIA is now only 1.62% away from taking over Apple. Wow, just incredible. Something else I want to let you guys know about is I'm working on a spreadsheet for my viewers to be able to completely free, offering it just to give it out to you guys. Just a spreadsheet to be able to track your trades and your portfolios. It'll be able to monitor multiple brokerage accounts. If you have multiple brokerage accounts, you can enter in all your trades. I'm going to share it through Google Drive and it'll pull in real-time stock data. And there's a number of different, spreadsheets that you can get out there, but this one I'm custom making myself, and I hope to have it in the coming weeks ready for you guys, and then I'll continue to publish revisions and upgrades into it and so on and so forth. So just a little something that I want to start to build as a part of this channel, and just some content that I can offer back to my viewers and subscribers. No charge, no mandatory subscription, no Patreon, no none of that. So just be on the lookout for that if you're interested in that. Tomorrow, I'm looking forward to Costco, Dell, and Dollar General earnings. Those should be some pretty interesting after-hour postings and market movement. Dell has been particularly interesting for whatever reason, I presume having to do with AI and servers and data centers and all that type of stuff. As NVIDIA seems to really take off, Dell seems to be kind of a close follower of their price action. So they're not moving as much, but of the tech companies out there, Dell is one of the ones that's really performing well as NVIDIA does. Virgin Galactic Holdings, ticker SPCE, is getting a non-compliance notice on minimum closing price. Also, Faraday Future Intelligent Electric, FFIE, is also in non-compliance. If they haven't been warned, I presume that they will be here shortly. Have to watch out for those meme stocks. I expect they'll be doing reverse splits and share offerings in the coming months to get back above the minimum thresholds and raise money for, well, they're probably going to raise money for their payroll so that they can still pay themselves, for starters. Not uncommon at all. So if this is why they say don't become married to a stock. If you're one of those meme stock traders and you're holding a bag thinking it's as low as it can go, it will only go higher from here. Well, no, it can go very much lower. It can go negative 99.9%, and then it can reverse split and do another negative 99.9% and infinitely get as close to absolute zero as possible. But your position can virtually become worthless, quite literally, down to multiple decimal points. So if you're still holding one of those companies, GameStop is not necessarily exempt from that either. We know that's a big popular one. GameStop rallied over 25% in the European market session Monday night, and apart from a little pop intraday Tuesday, has been sliding since. Hopefully not too many people are underwater on that. I mean, I know GameStop has collected a little bit over $900 million by selling nearly 45 million additional shares recently. That's not necessarily a good thing. Maybe they're getting money together to make a purchase of a company. Maybe they're getting money together to just keep themselves head above water for as long as possible. Doing these share offerings this late in the game with a failing business model is not typically positive in any sense of the word. If they're seeking to just go out and buy a company, then to me that just alludes that they have no other plan for generating significant revenue with their existing model. So why even? It's just the value is only in the intrinsic value of the name. There's no, if it's not producing money, if it's not expanding and building businesses and hiring on employees, and it's just shrinking and shrinking and shrinking and pulling more and more money out of the market and out of retail investors to continue to just keep the balance sheet rolling over, that's not a business I would want to be invested in. So watch out on that one. Not telling you what position that you should take on that one. I don't take any position at all. So if that's a stock that you really are diehard about and won't take any bad word or negative sentiment about it at all, then so be it. Certainly doesn't have the same momentum that it did in 2021 this go around. That is clearly evident. The Fed is warning against rising delinquency rates. Let's take a look at that one. So let's look at delinquency rates for consumers here. Let's see. We got delinquency rates on all credit card loans, all commercial banks, and I highlighted there with the yellow line the 2008. I see I accidentally chopped off the date axis again. The 2008 spike, we can see that we are nowhere near that. And if we also take a look at all consumer loans through all consumer banks, so that's including credit card loans, auto loans, personal loans, that type of stuff, we can also see that's nowhere near the 2008 levels. I saw an article through Barron's also warning that the Fed may be about to pivot and interest rates are going to start going down. I don't think so. And I'm not quite so quick to believe that the Fed really does see the rising delinquency rates unless they're looking at metrics that aren't publicly available. I'm still holding true to what Jerome Powell has been saying this whole time, which is higher for longer, and we can definitely remain at 5.5% for much longer. So potentially even a little bit higher. So thank you, JP, for keeping those rates higher for longer. And I'm just going to ignore this hoopla from these media companies suggesting otherwise, suggesting that the market's horrible, that nobody can buy a house because they are. Nobody can buy a car. I see nothing but new cars out there. I see absolutely nothing but brand new temporary plates 30 times a day. I remember 2015, 2016, when market conditions were optimal and interest rates were low, and the Fed was still adding money to their balance sheet. You hardly ever saw temporary plates on cars rolling around the road. Maybe one or two a day. I now see dozens a day. People are buying new cars in droves. It is absolutely nuts. A close friend of mine works with some auto dealerships in the area, and he has suggested to me that they are selling hundreds of new cars a month, and we are not even in a extremely populated area. We're talking a populated area that is less than 50,000 people. So Very impressive. That to me is not an indicator of market turmoil and hard conditions at all. That, in fact, quite the contrary. So let me know what you think about today's episode. Please include your opinion below. Please like and subscribe. Much appreciated. And I will be back tomorrow to upload news after the earnings come out, post-market close, and we will see what else the day has for us then. Thank you all for watching so much, and I will catch you all later.